Hey everyone, Laurus Lab has recently declared its Q3 results and it has been a disappointing show. Company's revenues are down 23% year on year, EBITDA down by 55% and net profits are down staggering 89% year on year. In fact, in 9 months of FY24, Laurus Lab revenue stood at 3,600 crore and net profit at 87 crore, which is way below its FY23 revenue of 6,041 crore and net profit of 793 crore. Interestingly, in spite of a poor show, both FIs and DIs are consistently adding stake in the company. The question is, what went wrong with Laurus Lab? So in this video, we'll try to decode the reason behind sharp underperformance in both revenue and profits of the company, and then try to figure out what should be the investment strategy for Laurus Lab. Please note that this video is only for educational purpose. Kindly do your own research before investing your money. Alright, let's get started. Before we discuss the reason for sharp decline in revenue and profits, it's important to understand various business segment of Laurus Lab, and then we'll look at the performance by each segment. So first segment is your formulation segment, which is finished dosage form. In this segment, Laurus Lab manufactures generic medicine for treatment of disease like AIDS, diabetes, cardiovascular issue, nervous system and so on. Then second segment is generic API that include your ARV API and non-ARV API. So ARV stands for antiretroviral, that is treatment for AIDS and HIV. And Laurus Lab is among the world's leading supplier of ARV API. API is basically the key ingredient in any medicine. And non-ARV API include your API for treatment of diabetes, cancer, cardiovascular issues and so on. Then third segment is CDMO. So that is your custom synthesis. That include your contract development and manufacturing service for global pharmaceutical companies, where Laurus Lab is involved in research, manufacturing and sale of steroids, hormones and other nutraceutical, dietary supplements and cosmeceutical products. Then fourth segment is biotechnology. In this segment, Laurus Lab manufactures high volume industrial scale biotechnology products for food, health and nutrition market for protein companies and biomanufacturers. Now if you look at 9 months of FY24 performance, FDF has contributed 27% in revenue, API contribution is 50%, CDMO synthesis contribution is 19% and biotechnology contribution is 4%. Now if you look at growth in each segment, FDF has grown 32% year on year. This growth is driven by stabilization of ARV business and continued volume-led growth in developed market portfolio. Their API business has degrown by 5%. Again within API, the ARV API has grown at very good rate, but non-ARV API has degrown significantly, resulting in overall degrowth in API business. The biggest laggard in 9 months of FY24 is CDMO business that has degrown by 65%. Now the reason for the degrowth is due to the high base of last year. Please try to understand this. CDMO is nothing but contract manufacturing, where Laurus Lab receive orders from other pharma companies for contract manufacturing. The problem is that this business is lumpy in nature. So basically in FY23, company received huge orders for contract manufacturing, but in 9 months of FY24, due to high base of FY23, it is showing significant degrowth. That's what management also mentioned. CDMO declined due to large PO executed last year, where its core business, excluding the PO, has grown by around 30%. Finally, their biotechnology business, that is still very small, has grown 66%. So current year of underperformance in revenue versus last year is mainly from CDMO business and API business. Now as far as profits are concerned, it has fallen significantly. And the biggest reason is due to operating deleverage. Try to understand this. Before COVID, Laurus Lab used to operate in the range of 20% margin. Then we saw huge jump in margins that touched peak of 32% in FY21. That resulted in multifold growth in operating profit and eventually got reflected in net profits. However, the margins have fallen from 32% to current levels of 16%. That is very important to understand the reason behind sharp fall in margins. So basically there are 3 key reasons. First is CAPEX, second is strategic investment and third is pricing headwind. So Laurus Lab has done a significant CAPEX worth 2,500 crore between FY22 to 24. Now obviously when you do such kind of CAPEX, you end up with high upfront expense which is not immediately reflected in the top line and bottom line. In fact, the CAPEX result in sharp fall in operating margin. And that's what has happened with Laurus Lab. Due to the significant CAPEX in last 2 years, Laurus Lab margins have fallen significantly. This slide gives a clear picture. Out of 2,500 crore odd capex, 300 crore is for CDMO R&D center, 500 crore for CDMO manufacturing, 600 crore for FDF ramp-up phase, and 1,050 odd crore is for API segment. Management has mentioned that over 60% of capex into API FDF yet to meaningfully scale up, and one-third CDMO focused commercial and development investments are already underway and expect to contribute from FY25. If you look at asset turnover, currently it is 0.9 and expected to reach 1.1 times average in 5 years and 1.4 times at its peak. Then second reason for operating deleverage is strategic investment. As you can see on the slide, company has collaborated with IIT Kanpur for gene therapy. Then Laurus Lab has invested in ImmunoAct, where it acquired 26.6% stake in November 21, then increased to 34% in May 23. ImmunoAct is basically involved in novel cell and gene therapy technology for cancer treatment. Laurus Lab is doing some groundbreaking work in cancer treatment technology. Then Laurus Lab is also investing in its biotechnology division. Overall, there is around 450 crore of investment in these breakthrough technologies in last 3 years for its future growth. Company intend to invest around 10% of its profit on disruptive technologies. So due to huge capex and strategic investment, company's margins have fallen significantly. That has badly impacted the profitability. Another factor that resulted in fall in profitability is the pricing headwind, where its ARV API and FDF segment is facing pricing pressure. Now the question is, why is Laurus Lab investing so much in future technologies in medical science? And is it really worth investing so much for capability building? The answer here is its founder and leader Dr. Satyanarayan Chhawa's aggressive style of growth. He has been very aggressive in diversifying Laurus Lab to reduce its dependence on a single segment and investing in future technologies. It has worked out very well for the company in the past. For instance, in 2016, Laurus Lab relied heavily on ARV API business that contributed 82% in company's revenue. From there, it is now reduced to 25% in FY23. And that diversification into your CDMO, FDF and other API segment was the key reason Laurus Lab was able to grow consistently from around 1100 crore in FY14 to 6000 crore in FY23 at around 20% CAGR rate. And profit zoomed from 97 crore to 800 crore during the same period. Although the profit jumped significantly in 2021, but that was also because of COVID effect. And today, company is not dependent on a single business. So in that sense, the segmentation risk has reduced and the ongoing investment in capex and new technologies would eventually result in further growth in the future. Please note that Laurus Lab invested heavily in R&D as well. It has a team of around 2,400 scientists that include more than 1,000 scientists only in R&D team. That speaks a lot about the innovation in the company. Company has been granted 223 patents and consistently filing multiple products for approval in US and European market. Needless to say, the total addressable market for Laurus Lab is huge and company is trying to capitalize on this market by investing in future technologies. Having said this, we can't neglect the fact that company's 9 months of FY24 performance is subdued on both revenue and profitability side. While profitability is still understandable due to ongoing capex and strategic investment, the revenue slowdown is also a concern. And this was the major question asked to the management in the recent con call. The question was, in terms of numbers, give us a sense of where we stand and how you see FY24 year closing and next year. On that, management mentioned that we are putting bad quarters behind. Although management did not give any guidance in the con call. However, I was going through their recent interview with CNBC where they mentioned that they expect Q4 margins to jump to 20% from current levels of 16%. So as the operating leverage would start kicking in, Laurus Lab earnings would increase. I hope you got a good sense of what has happened in Laurus Lab business. Now if you look at the share price, Laurus Lab touched a high of around 700 in August 21. And since then, stock is corrected more than 40% in last 2.5 years. Although in spite of weak performance in 9 months of FY24, its stock price is up nearly 30%. Now that is very confusing, isn't it? Why is the share price not falling further even after a poor show in FY24? And since the earnings have fallen significantly, but price has actually gone up in FY24 so far, Laurus Lab today commands a PE of 114. Obviously on the face of it, the valuations looks crazy high. But here the catch is that market is always forward looking and it seems Laurus Lab investors are betting on the future growth prospects in the coming quarters due to the current ongoing investment. In fact, when the operating leverage would start kicking in, its PE ratio would fall significantly. For instance, if Laurus Lab touches revenue of let's say 6,000 crore in FY25 and margins expand to 20%, it would be hitting an EBITDA of around 1,200 crore against trailing 12-month EBITDA of around 800 crore. So that would be 50% jump in EBITDA. But honestly speaking, I'm not able to digest the current price of Laurus Lab. Again, fundamentally, there's no problem. Laurus Lab is fundamentally strong company, but I was expecting more correction or at least consolidation in the range of 300 rupee. That would have been a great buying level. Although currently it is trading at around 400 rupee. The question is what to do with its share. If you are an existing shareholder, should you hold it, add it or sell it? And if you are a new investor, since Laurus Lab share price has fallen more than 40% from its peak in last 2.5 years, is it worth investing or better to avoid it? Before I share my latest comment, please have a look at what I said in my last video on Laurus Lab. So if you have the patience and courage to invest for long term, then there is no need to panic. I'm certain that top pharma companies like Laurus Lab will eventually bounce back. And it is also very clear from their future growth roadmap. So one of the strategy in current market situation is to hold the stock and wait for the quarterly results. And when the results show improvement, then you can consider accumulating the stock. But again, let me repeat, in the near term, there can be more pain ahead due to lack of visibility, but there is no need to panic in the long term because future is certainly bright for Laurus Lab. And today, I would stand with my word. If you have a long-term vision and already holding Laurus Lab, then there's no need to panic. You can consider holding it and keep a close eye on the upcoming result. If the situation starts improving from Q4 as guided by management, then you can consider accumulating it. However, if you find a better investment opportunity where you find more growth potential, you can certainly consider switching it. As far as its shareholding pattern is concerned, Laurus Lab seems to be favorite of domestic institutional investor. It's been 12 consecutive quarters where DIs have added it in spite of weak performance, which is very rare. In fact, even FIs are adding Laurus Lab consistently in last 3 quarters. Weekends of public have reduced significantly from 48% to 36% in last 12 quarters. Even ace investor Akash Bansali has added stake in the company in December 22 quarter and then added more to it. So if I quickly summarize, after significant outperformance during COVID, Laurus Lab has seen a significant slowdown in revenue and earning growth that is impacted significantly due to heavy capex and strategic investment. Although management has guided that worst is behind now, so expecting recovery from Q4. Laurus Lab has been an innovator and has invested significantly in future biotechnologies. This aggressive growth style has rewarded the company big time in the past, and it would be interesting to see if Laurus Lab can repeat its previous success in the coming years or not. Now that is something only time will tell. Anyways, I'll keep a close eye. Now tell me in the comments what is your take on the company. If you find this video useful, do share it with your friends. And if you are a long-term investor looking for a community of like-minded people, I have a weekly video series where I share one exclusive video every week along with Excel trackers and a closed forum to discuss various aspects of investment. You can explore it on my website. I'll see you next video. Till then, take care.